Hello, investors and traders, and welcome to the Midweek Market Report. I'm AJ Monte, and before we get into the charts, I'd like to first point out that we have a 7-point trading checklist that we make available to the public. This is how I establish the price targets, and it's the main reason why we have such a high percentage of accuracy with regard to hitting our price targets. Just to give you an example, last Wednesday, we had our rapid fire session where each of our members have the opportunity to submit ticker symbols to me. I established the price targets, and then we track those over time. You could see that the green colored cells here are the stocks that have already hit their price targets in just 5 trading days. Now, as I scroll down here, you could see that we have a good number of stocks. I generally go over 50 to 60 stocks a week. And after 5 trading days, we already have 56% of these targets hitting. Now, that is on the high side because we're getting a lot of volatility this week. If I scroll back, you'll see normally we get 25 to 30% in the first week. And then moving further back in time, you can see 46% of the targets have hit. Going back even further than that, you could see that 72% of the targets hit. I could keep scrolling. I don't want to make you dizzy here. But then you have, in the 80s, 82%. I'll go one more back, see what we got there. I think it's 84%. And a lot of times what I'll do for our members is I'll even establish 2-part price targets. Like here, ELF. For at least. Let me just take a look at that for you and you'll see what that looks like. And so you know how I'm setting the targets. Remember, this red candle right here was last Wednesday. And I said we could go a little bit higher, and then I thought we would pull back after a drop in volume. And guess what? That's exactly what happened. Friday, we hit that upside target perfectly, and even in the same day, we came right back down to hit the downside target. That is not unusual at all. Many times I'm putting 2-part targets out there for our option traders, and I do my best to try to give them a fairly decent time frame on that. Now, with regard to some of our services, I just want to show you what we have going here. This is not an income claim by any stretch, but I want to show you actual trades that we put out from the beginning of the year, starting on January 3rd. Again, this is for educational purposes only, and please don't construe this as professional advice. I'm just giving you an example of what we do for our members. I put out publications that give the technicals on certain stocks that look good. And you can see we started off the year with Hasbro. We looked at the calls here, the April 60 calls for 220. They went up 18%. By January 6th, and you could just follow along here. We have an 88.8% success rate coming into 2025. We're still holding PCG, but look at these most recent home runs here. We bought calls on Apple for $4.50. Yesterday, they got as high as $11.60, so that's up 158%. And these are actual trades, by the way. You can see down below, these are the trades as they come out into the member page for our members to see. Now, once I put out the notes on that particular stock or option that we're trading, you can click on that button right there that gives you the view to a video that explains the entire strategy. So if you want to come on and sample some of this, it's absolutely free. We do not obligate anyone to give credit cards or have to cancel. You come on 2 weeks, you watch what we're doing, you listen to the webinars, you can listen to recordings, you can look at the trades, maybe you could paper trade to get used to what we're doing. And then if you decide you want to come on board, then we'd be more than happy to have you come on. Now, let's get to the charts. As you can see here with DIA, the markets are still open. We have these small body candles right here as I magnify that. That's a spinning top yesterday, and we have very close to a doji, almost a hanging man right there. Look at the drop in volume here. That drop in volume on the way up is bearish. This is one of the things that we look at on the trading checklist. You can see here it's second on the list because volume is actually a leading indicator. And I'm going to be talking more about that on Friday as we give you some educational content to look at. So as the volume is dropping on the way up, it's telling us the buyers are getting tired. I still have my downside target down here on DIA at 425.51. I'm not moving from that at all. Looking at IWM, you can see this is the Russell 2000 ETF. We've already pivoted lower. Downside target on that is still set in place at 220.23. And that is not changing. Look down below. The stochastic is crossing with a sell signal today. And if you look at the Qs, that's the one that's the most painful for those who are long tech. We've already hit my downside target here from last week at 510.16. I think we're going to revisit that level. So I'm keeping that in place for a second touch. Again, 510.16. Look down below. The stochastic is crossing, and we have a little bit of a hinge right there on the CCI getting ready to head back down. Thanks to all the AI news coming out of DeepSeek and how that's affecting the AI stocks, that's putting a lot of pressure on tech right now. And that story is still unfolding. And I believe there's a lot of trading opportunity out there just waiting to happen. And that's why we're keeping such a close eye on the charts. Looking at SPY, we have a hanging man. That is a bearish Harami. I have a downside target that was almost hit on Monday. That's at 590.63, keeping that in place. Look down below as I magnify that. That's a sell signal on the stochastic. And we got the CCI hinging back down. So keep an eye on that. Now the VIX, this is very interesting. We zoomed up early on Monday, came right back down, and it gapped up. Now this is something you have to pay very close attention to. That gap will most likely act as a price magnet. There's still a chance that gap could fill, but I'm not going to guarantee this one. And the main reason is in the COVID crash, the VIX gapped up, and it took about a year before that gap filled. I'm not saying that's going to be an exact duplicate of what we're going to see here in the VIX, but that is most definitely going to act as a support level. If in fact we do wind up filling that gap, then guess what? I'm going right back up to the top, right around 27 for an upside target on the VIX. Now, I'm going to talk a little bit about silver. If you're following my X page, you'll know that I put out a post on X. Here it is. And I told everyone once this gap down here filled at 27.31, I would be a buyer. I'm a big buyer of silver right now, and I have been all along. I think we have a major squeeze about to happen. Make sure you follow my article on ZeroHedge that went out on Monday talking about the cup and handle that we're finding on the monthly chart on silver. I'll put the link to that article down below so you can get an eyeball on that one. And there is a silver shortage in the works. Keep an eye. I think this is going to heat up and be a very, very exciting for the silver stackers out there. If you have not yet gotten into silver, listen, it doesn't cost that much. You could go out there at any of these websites and buy a single silver coin just to say you're in it. But this is, in my opinion, one of the greatest hedges against inflation. And the Fed came out talking about how inflation is still on the rise. So I'm continuing to accumulate. Our members are still accumulating. We're trading in and out of silver. We're trading in and out of the option markets. And we are having a great time. We have a lot more content coming out on Friday. So if you like and subscribe and hit that notification bell, you're going to get some free education this week. Stand by. I am pumped. I hope you are too. And I look forward to speaking with you on the next video. So long.